everybody. Thanks for having us here today. I'm Brady. I'm the crypto reporter at Axios, and I'm here with Noah.
Great to see you. Thanks for having me.
Yeah, thanks for being here. Thanks, everyone, for joining us. So we're here today to talk about Celsius, everyone's favorite crypto lender. So Noah, just to start it off, and I don't think you probably were a customer, but just looking back on Celsius in 2017, 2018, 2019, can you sort of make the case for why someone would want to be an investor or a user of, like, why would Celsius make sense to someone?
Well, I think that they made just a wonderful, easy to use experience. And we were in a zero interest rates environment, and they had an interesting return profile for something that a lot of people just found a lot of their net worth in. And they made it easy, and they made it compelling, and people enjoyed it.
Yeah. I remember seeing Mashinsky for the first time at a stablecoin conference here in New York City in 2017, and I was kind of blown away by how charismatic he was on stage. I mean, he was just like clearly the best speaker at that gathering. And I've learned as a reporter sometimes to be a little skeptical of someone who has that kind of charisma, but still you couldn't miss it. And one line he gave, and he gave this all the time, was, we are going to pay you more interest. Banks used to pay savers more interest. They don't anymore, and that's because they're screwing you, and that it's as simple as that. And so that was a compelling message to people, right?
And I think that he was very crisp and clean and clear about the value proposition. But I just go back to what Omaha would say about this, which is optimists make terrible bankers.
Yeah. Right. The Sage of Omaha. Okay. So and then let's talk just for a second about Celsius was able to fund itself. It was able to get off the ground with a $35 million initial coin offering for its Cell token. Did Cell ever make sense? Was it worthwhile for Celsius to have Cell?
I think that they very much had a thoughtful kind of way to share economics, and it was clearly beneficial for the company to be able to just bring people deeper into the ecosystem. And so I would say that part, I think they tried to include people in their success, and then I'm not really sure from a securities perspective or anything else how well they actually did at it.
But it wasn't like the kind of idea for most of the good tokens in that time is you would make a token that was needed to use a service with the idea that, like, as the service got stronger, the token would grow more value, and eventually kind of users would become the owners. That was never really going to be the story with Celsius.
It didn't have any of the same flywheel dynamics.
Yeah.
And you think about something where there's a centralized company or entity that you have to rely on for success, and that will never truly be decoupled. So you look more like a buy and burn style token no matter what.
I think one of the there was a lot of moments in which my skepticism for Mashinsky got to be pretty intense. But as he tried to sort of claim during the DeFi boom of 2020, he was like, we're DeFi. It was just like, no, you're clearly not DeFi. That was like
well, one of the things that I think is interesting reading in all of the public filings is they definitely did make serious moves. And there were wallets that have alleged to be associated with them that did very, very aggressive things throughout DeFi. So I think it's fair to say that they definitely put large amounts of capital and did some pretty crazy stuff. But that was one component of the business.
So they were making whale moves in liquidity farming, much like it was Celsius and Alameda Research out there sort of taking advantage of DeFi summer.
And certainly there were some of these instances where if you think about paying yield instead of selling equity in the upside of a future ecosystem, I think that some of those were very beneficial if you were early and if you had size that could turn into meaningful return relative to what they had to pay out to creditors or to depositors on the other side.
Okay, so now let's catch everybody who's here up. Celsius obviously went into bankruptcy last June, I think. That was like one of the first big bankruptcies to hit. You are now a part of the Fahrenheit group, which looks set. It's not guaranteed yet, but it looks set to take over what's left of Celsius. So tell us about Fahrenheit. Tell us about what you've bought.
Absolutely. Fahrenheit came as sort of a bunch of friends looking at a situation that was really tragic. And these were folks that had retirement money and savers money, not speculative risk capital. at stake. And there came a moment in the workout of the situation where they're trying to figure out how to go forward with all of these illiquid assets that were not getting, frankly, the cash that they should have or could have. That it became clear that the enterprise would be worth more if it was actually run and managed and had fiduciaries in a go-forward environment.
It would be better to not sell off everything right now at fire sale price.
The bid-ask spread on some of the things was so wide between what the mining machines would be worth in a public entity plugged in, and the remnant cash value that the estate might have been able to get that day on the court steps.
And go through your partners in Fahrenheit.
Absolutely. So Fahrenheit is a group of 5 of us, friends and partners. First and foremost, Mike Arrington, founder of Arrington Capital, myself, our partners of US Bitcoin, who is going to be a tremendous part of operating, and they have at least filed to do a merger of equals with Hut 8. And then also Steve Kokinos, who was the founding CEO of Algorand and is the proposed CEO of the NewCo, should the bankruptcy plan be contemplated approved. And then a gentleman, Ravi Kaza, who is a longtime public markets and now runs his own capital.
And you all have bought basically 3 big pools of assets, right? Could you go through what?
Yeah, you can think of it as all of the liquid things that are simple to distro. The goal of the estate has been to try and get liquid things back to folks who have been affected. And then there were big buckets of value that need workout, that need management, whether it's institutional loans that have a long tail, many in arrears, whether it's mining machines, of which many are in cardboard boxes today through a variety of kind of bad stuff that has happened, and otherwise. And so we very much are viewing the net NewCo as we anticipate to run a mining business, we anticipate to have a self-staking business, and then deal with disposition of the rest of the illiquid assets. So
you've got a big pile of loans due from big institutions. Can you say anything about like what kinds of does 3 Arrows Capital owe you a bunch of money, or like what kind of institutions are we talking about here?
I believe it's public that Celsius is one of the sizable creditors in 3 Arrows. And they were
so is that money coming back? Like, are you going to see anything there?
Well, if you look at how claims are trading, that number's been drifting up.
Okay.
But those are situations that probably well-capitalized people can get involved in and try and make the most of it alongside other creditors.
I mean, feel free to give us scoops here on stage if you want, but we're all for it. But who were some other creditors in there that folks might know of that is known or unknown?
I would just say all the usual suspects,
okay,
as well as if you think about it, it's very difficult to generate yield in Bitcoin, which is one of the most incredible asset return profiles. And so the kinds of people who can do that are typically harvesting volatility or have some other active trading strategy that lets them net gather more Bitcoin.
So what you're saying is a bunch of the debts that you guys have are people who owe Celsius Bitcoin. They borrowed Bitcoin.
They borrowed Bitcoin. They borrowed Ethereum. Some of those have been dollarized in various other groups' defaults or bankruptcies. But net, think about people who think that they can outrun an interest rate in Bitcoin. And that's kind of a wonky group just from a traditional credit risk profile versus lending dollars collateralized by hard, non-volatile assets.
Theoretically, this should be a great time for those borrowers to pay you back, right? Because it's the assets are probably bought at a higher price, right?
Yeah, and I think that just the general stress in the markets has extended to many participants, large and small alike, and certainly smaller than Celsius.
Have you gotten any through this process? Have you gotten any insight on the distressed asset market?
It's really an interesting time out there, both in crypto and soon to be broader in the world. And what I would say is, in a world of zero interest rates, so many companies got pumped full of capital as funds had more and more to deploy, and due diligence processes became shorter and tighter. And some of the firms that have failed in crypto were famous for no time for diligence, the deal closes tomorrow kind of things, and that creates dislocations.
So what can you tell us about what's going to happen to folks? Like, what's happening with the Cell token in this process? Do you have any insight into that? Like, what's going on if folks are hoping to cash out their Cell?
I would say that people are trying to figure out what the appropriate value, if you had 100 unit of Cell in your Celsius account at the filing date, how that should be struck and how that should be handled. And I think that the process sort of went one direction. There's some groups of people who might want a different thing, and ultimately it's going to be the courts and sort of thoughtful argument that'll settle.
So you guys don't have anything to do with that. This is not a Fahrenheit decision
That's
to make.
nothing that we have a view on.
Okay. So Helmy, I think one thing that folks following the Celsius story as it was trying to save itself might have been confused about, I was confused about this, is help me understand why, if you're a major crypto lender whose business is starting to fall apart, it makes sense to be like, actually, we're going to become a Bitcoin miner really fast. Like, when we talked before, you said there was some logic to that. So it didn't work out, but like, what was the logic?
So the most optimistic case is if you have a profitable Bitcoin mine, then by definition, your fiat cost of Bitcoin is below the value of the Bitcoin on the day you receive.
Right.
And so you can kind of think of a mining machine as a collared call on future Bitcoin price, adjusted by difficulty. And so all of that is to say, it is one of the natural places where you could take Bitcoin, turn it into fiat, do productive things, and then potentially wind up with more Bitcoin than you started with.
So you're a distressed lender, but one thing you have is a bunch of Bitcoin. So you sell off the Bitcoin for cash to buy mining machines as a way to extend the value of your Bitcoin?
Or you hope that you'll generate more Bitcoin over time, and you may potentially achieve equity value, because Wall Street has, at various points, very favorably valued the riots and marathons of the world. So I can see a world where they said this will be a productive equity value to the corporate parent to help them survive some of the liquidity mismatch that every bank or every deposit pooling institution ultimately has to face.
Okay. It sounded like a crazy Hail Mary pass to me. It was just like
Well, every bank failure, if you look at the BCCIs or the Franklins or any of the great surprise failures, all come from concentration at some point in their book mixed with mismatch. And so you have the stress of Terra Luna, you have concentration in mining, concentration in some of the other names, and that's just a very classic formula, unfortunately.
So, okay. So for the Bitcoin fans out there, how much hash rate power will you all theoretically be in control of if this deal goes through? Like, how many machines are sitting there?
So you can think of it as approximately 130,000 relatively recent generation machines.
130,000 ASICs?
Correct.
Okay.
And so we hope to have those. Not all of those are currently generating Bitcoin for a variety of reasons. And so the new co, should the plan be confirmed, we hope to have those really working away happily as this structures an anticipated new co with no debt, unlike lots of other miners, will be well positioned to do so.
And these are all machines you guys actually have? Because I know a lot of Bitcoin miners actually subcontract their mining out to other miners. So these aren't like leases.
Celsius fully purchased the actual underlying machines. And then at that scale, there's obviously a wide variety of hosting arrangements or facilities. And it's a portfolio effect of how to actually get that many machines live and functional.
So if those all got flipped on today, like how would Celsius compare to existing miners?
It would be one of the largest mining firms that
like rivaling Marathon or
similar zip code. Obviously, those guys comp also based on future anticipated growth of mining machines. So the actual what is the total petahash varies, but I would say that's the zip code that we're.
And do you feel confident that the machines that have been bought are like in a good disposition? I mean, it seemed like a lot of crazy things might have happened. You know, they could have been stuck in a leaky warehouse somewhere or something. I don't know.
I've spent some time in the mining industry, and I would say among all the situations that I've seen, this is one that the team feels pretty optimistic, and it's a big operational lift, obviously, but it's tractable.
So, okay, so I think you told me you have 3 pieces of assets you guys have bought. You've got the institutional loans, you've got the mining rigs, and then you have a certain amount of other crypto assets that also were sitting there.
Yeah, and there's a bunch of, think of it as investments that Celsius made that are subject to vesting agreements.
Okay.
And then there's going to be a portion of liquid assets as well, so that the net public mining company has a fortress-style balance sheet that lets them really prosper going into the halvening.
Which one of those 3 sets of assets do you think the management from you all will be able to do the most to sort of like restore value for people who have debts to Celsius?
Well, I would say simply that for mining machines that are in cardboard boxes, people with industry expertise at scale, of which our group, I think, has demonstrated a wonderful return on equity. That's not a hard lift. There's a lot of work to be done. Let me never state that.
Right.
It's the kind of thing that our team is very excited.
Turning them on is going to be instant. That's going to be some instant.
And then there's other things, just like in the spectra of support that you have to run one of these institutions at scale. We depend and we work with a lot of partners, whether it's mining pools, this, that, or the other, where scale begets scale, and people who have operated at scale in other contexts kind of know how things should be priced and can call in favors, and all with the North Star of driving more unit Bitcoin and Ethereum per share of the net new company as the goal.
And so going back to the acquisition of the assets, there were like 3 big sort of consortium going in for it. Can you tell us anything about the process? Like, what was the process like to actually buy the assets?
So in bankruptcy, you can kind of think of these auctions as all the different groups are in different conference rooms, and then the debtors' advisors come around and say, we'd like you to improve, we'd like you to improve. And this auction lasted more than 4 weeks, which was pretty, we're told to be pretty an outlier within the normal bankruptcy process.
That's a really long process.
Yeah, and that's partially just because the size of this enterprise, the complexity, a number of things that had to be addressed successfully, and then all the different ways that people had depository or otherwise relationships with the company meant that there are a lot of different groups who all have different needs and different things that have to be addressed in the cohesive plan.
And how did you guys win? Was it just like, we'll have the biggest check, or was it more complicated than that?
Qualitative and quantitative.
Okay.
Because ultimately the creditors, the future owners of this business, had to pick managers that they thought would be able to help make the most out of the assets. And then there's also a quantitative piece, which is what is the total, as part of the transaction, we're buying primary in, and our block will be collectively one of the largest, if not the largest shareholder in the net new company, and the only one subject to lockups at the initial emergence. And so all of those sorts of factors really matter.
And what do you think was the difference maker for you guys' deal winning?
Well, I think that we just, through one, we have a pretty sizable staking business as part of Proof Group that we anticipate contributing as part of the new co. The US Bitcoin guys have an incredible track record of actually driving net equity value in a mining company. I think when you add up all the different pieces of expertise, Arrington Capital, long-time track record of doing very, very well in the crypto space as we think about monetizing all these crazy assets, when you add up the totality of it, we just were excited to partner with the creditors and owners of this future business.
And will Fahrenheit go back into lending? Like, is crypto lending out of the Celsius remains coming back?
We're going to do mining, we're going to do self-staking, and we're going to help monetize a bunch of these other assets, and that's going to be a whole lot of work.
Okay. And then once those loans have closed off, that's the end of that business?
Yeah, and then as part of the loan settlement, folks are working out the right way to help everybody's tax treatment to be most favorable and just do the best that they can for folks in that situation.
Do you think the next time there's a crypto boom, there will be another big crypto lender come back out and
it's a problem that has to find a great solution, because inherently Celsius found that there was humongous demand for people who wanted to see their assets put to work. and that's
Okay.
an exciting mission.
So this was a service that people actually wanted. All right, thanks a lot, Noah.
Thank you.
Peace, everyone.